Hi, I'm Nimit Brumbat, and you are listening to my not so profound thoughts. Today, the topic is betting against the economy. So, I'm going to tell you that why investing in gold is actually betting against your economy in the country which you live. So, first of all, uh, as we have seen that the stock market indexes are going down, not precisely in a bearish market, but are not improving that much, as well as going down by percent or 2% on a daily basis, or 0.5% on a daily basis. Especially the banking index for India, if you see Nifty, Bank Nifty, it is going down. Why? Because the asset quality is declining, and it is expected that there will be future non-performing assets which will lead to bad debts and a total restructuring in the banks. Also, that it shows that the banks have identified that the infrastructure projects or the other projects have slowed down in our country, which shows that we are heading towards a recession. And it is not because of coronavirus, but it was before that. And the NPAs will be declared now in the profit and loss statement in the balance sheets, which they have to show annually to the shareholders because they are listed companies, and which definitely says that we are going towards a recession where there is a lack of demand, the supply is also less, and due to lack of demand, the companies are supplying less. The companies are supplying less, they are doing layoffs. Because of the layoffs, again the demand is falling, and this is like a cycle where which leads to recession. So a lot of companies during the lockdown failed, so they need to be restructured, and the fiscal stimulus provided leading to increase in taxes, inflation, currency, and even debt crisis for the government. Let me explain. The fiscal stimulus was provided at in India at 10% of the GDP. So the 10% which needs to be recovered by the government is eventually paid by the taxpayers, or we can say the citizens, normal citizens, which we are paying. It is not just income taxes, but paying taxes in indirect form while purchasing anything also. Also, people are asking for bailout in some of the sectors, as well as more more stimulus is being asked. So I believe that the government should behave in a way, in a capitalist manner, that if there are companies failing, the government should allow it to fail, but not provide more uh, fiscal stimulus. Because what I have seen after providing the fiscal stimulus, the prices of the consumer products have gone up, the debt of the nation has increased, as well as the government has charged taxes in petrol and diesel prices, which is not into a GST regime, but it is still into VAT and CST. And thus, what I am paying right now for petrol prices of 1 liter, I am paying 60 to 70% of taxes to the government. Why? Because the government has provided fiscal stimulus. But if the government thought for a second, even for a second, like a capitalist, then many firms would have failed, many firms would have survived, even some firms would have grown tremendously because of the opportunity or because of the competition going down, while many were not able to manage their finances, and the layoffs occurring because the employees were not able to add value, as well as the business were not that good enough to retain their customers. So that is why I believe that if some businesses are falling, the government should let that business fall. It is not just the problem of employment, whereas according to economics, if you see that there is never a full employment. So even if there is less employment and employee unemployment is more right now, it is because that those employees were not able to add value. There are many companies who have retained their employees who were able to value, and what happened is right now that the new education policy which came focused more on employability rather than employment numbers. What I mean by employability is that any student who graduates from college would be ready for the industry. So the any student who is graduating would be already industry ready. Whereas what used to happen was the education which was provided was based on old technology, not that much flexible, and specific to a certain sector such as commerce, arts, science, and that was the bifurcation that was made. What is happening currently right now is deflation is not happening and the consumer prices are rising. What I explained, that tax on petrol and diesel, so that is a sure short thing that is happening, leading to inflation, because if petrol and diesel prices are rising, mostly trucks, the engines in railroad, as well as aviation fuel, as well as the trucks which are doing logistics, their cost has gone up. Their cost has gone up. So a B2B manufacturer or B2C manufacturer gets impacted on that cost eventually. So if I am paying 60% of taxes, that 60% is burdening a manufacturer or the end consumer at last, because the cost has increased tremendously, as well as he is paying additional 18% taxes in many cases, in many FMCG products. And inflation is creating a problem where the interest rates are down, the income is low, and inflation is high, and one is not able to earn that much, as much, or is not able to have that much income growth as one should have, and is not surpassing inflation as of now. Even the debt crisis where the government is pushing is not actually printing notes, but is applying the model of Zimbabwe, in which they are circulating bonds, which where the term period is longer, but the yield which one generates is very low. So that is also a problem, that you don't beat inflation, as well as once you get the returns, you pay taxes on it, because that is your capital gain which you have received. And this is done by the central government of India, as well as this is done by the federal government in USA, while making a Zimbabwe model, but which is not feasible, which eventually leads to inflation and rising in consumer prices, where the value of your currency which you are earning declines. Also, there is one more thing, that rupee is being appreciated, the gold is being appreciated, the gold prices are going down, which means the liquidity preference of the consumers are changing. They are speculating that the gold is much more safer investment than investing in the economy. What I mean by economy is investing in the companies which are doing infrastructure projects, which are doing packaging, which are into aviation, which are into whatnot products or whatnot services. But they are not investing in stocks. They are keeping cash with them, as well as because the pandemic is going on. So they might require cash, as well as they consider that not real estate or not into stocks, but gold. And people think that the prices of gold will come down eventually, but this buying is growing. The buying is growing, but not in physical form, but in the government bonds, which they have produced, I suppose, since 2015, the sovereign government gold bonds, in which one earns 2.5% fixed interest, as well as though don't have to be they don't have to incur any expense in keeping it safe. And this is not just India, this is a global move where everyone is continuing on buying gold, but at some point of time the gold will come down, because when the economy revives, it is a sure thing to come down. But till then, I expect the gold prices to go up. And because you are investing in gold, you are not investing in economy. And in a way, we can say that you are betting against the economy, in which you believe that gold or the gold standard which was established is more safer than betting in the economy, which is currently very volatile. So that's all for today. If you have any questions or any suggestions, you can message me on Instagram or write me on Twitter or write a review. I don't mind. Or you can, if you have my number, you can text me, and I'll be sure and happy to help. That's all for today.